Two of the big four banks have already shrugged off the government's call to pass on the Reserve Bank's full interest rate cut after the official cash rate was reduced to a record low of 0.75%. So far, the Commonwealth Bank and NAB have announced their decisions. The Commonwealth Bank was out first, announcing it would drop its standard variable home loan rate by 0.13%, around half of the RBA's 0.25% cut. The CBA is passing on the full cut for investor interest-only loans. The National Australia Bank will cut its standard home loan rate by 0.15%, and a 0.3% cut to interest-only investor loans goes beyond the Reserve Bank's move. And the Reserve Bank Governor has conceded that further interest rate cuts are inevitable. Philip Lowe called on government and business to step up and address globally low interest rates. Interest rates have been slashed below 1% for the first time in Australia's history in a bid to stimulate the flagging economy. The official cash rate now sits at 0.75% after the third interest rate cut in 4 months. The Reserve Bank's Governor, Philip Lowe, says central banks are being forced to respond to slowing growth.
Globally, the main issue we discussed is the uncertainty generated by the trade and technology disputes between the US and China.
Some of the big four banks have already passed on the rate cut, but not all customers will receive it in full. Dr Lowe has told an RBA board dinner low interest rates are a global issue.
This means that the key to a return to more normal interest rates globally is to address the factors that are leading to a low appetite to invest relative to the appetite to save. And that's mainly a task for governments and for business, not for central banks.
He concedes further cuts are inevitable. Off the back of the decision, Treasurer Josh Frydenberg has told Paul Murray there are still good signs in Australia's economy.
And they pointed to the benefits from the tax cuts that the Labor Party actually opposed, as well as the interest rate cuts and the stabilisation we've seen in the domestic housing market.
The opposition isn't convinced. Labor spokeswoman Kimberley Kitching telling Andrew Bolt more needs to be done to stimulate the economy.
They're very keen to get a surplus, and we all understand that would be good, but a surplus and that kind of restraint isn't actually going to help our economy at the moment.